Hi, today we're going to talk about IFTA. My name is Penny Royston, owner of Evilsizor Associates. I have over 31 years of industry experience that I want to share with you today. So let's get started. So what is IFTA? IFTA stands for International Fuel Tax Agreement. It's an agreement with all the states and the Canadian provinces, so you only have to file one report. So it does make it simpler because I remember filing reports separately to all the different states. So believe it or not, it is a little bit easier. It's a license required for all interstate vehicles over 26,000 pounds. Now, gross vehicle weight is truck, trailer, and load. Like a typical semi is 80,000 pounds, so they would qualify for this permit. You would get a license and a sticker that you put on each side of the cab, just shown here, like from Wisconsin. To be sure, each state where fuel is consumed is paid the proper tax for using their roads. It's all about fuel consumption. It's also, in my opinion, to avoid a boycott. So you cannot boycott a certain state. You can travel through it and not purchase, but you still have to file fuel tax, and that's where they will get their tax revenue from. So again, fuel purchases are not required as you travel through the state because this report allocates the proper fees going to the different states. And it covers all qualified interstate trucks in your fleet. If you have an intrastate truck that does not go out of the state, you don't have to report that one. All interstate that travel 2 or more states. So it's all based on this calculation. So the calculation is this simple. It really is. It's miles driven per state. So we're going from state line to state line for our calculations, not city to city, because you could go to Albuquerque to Amarillo and you've got 2 states involved there. And it also involves gallons of fuel purchased per state. So you need to add up those gallons that you purchased. This isn't about how much you paid, and I know that matters, but not in this calculation. So the final calculation is your miles, and you're divided by your gallons that you get your MPG, your miles per gallon. That's the key. So here's a sample IFTA report that I pulled from one of our clients. And you'll see here where item A, right here, we have calculated the total IFTA miles. Now, I don't have any non-IFTA miles. Really, the only place around right now that's non-IFTA is Washington, D.C. So if you have Washington, D.C. miles, that would be entered in that calculation right there. But everyone else is a part of the IFTA agreement. And then you add A and B, and then that's our total miles. And then we're going to calculate our fuel that we actually purchase in the states, and that's going to give us our average MPG. Now, this average MPG needs to make sense. Just know that. And then we start calculating everything out by individual states. So acceptable records for this process is an old school Tripsheet. I prefer that. I think that speaks volumes. You could do a spreadsheet or the ELD. The ELDs I have found sometimes miss information, and it doesn't gather everything that you need for this report. So when ELDs came into play, it didn't replace IFTA. IFTA is its own separate agency, and their rules didn't change. And a lot of people don't realize that. So here's samples of the trip sheet. So the one on the left here is just an old-fashioned, you're going to write it in type of document. So you're going to list your name, address, trip number, which you can make up. It can be one or the date or whatever you want to put in there. Your tractor number, trailer number, the date the trip began and ended, the driver's name and signature. Then you're going to start with the beginning odometer. And then you're going to list each state, the routes that you traveled, and then the odometer as you left the state. So this is where you start calculating your miles by state, not city to city. That's very important to know. And then you calculate all the way down, and then you'll figure out what your total miles will be. But also, you have individual miles per state listed on this trip sheet. Then you enter your fuel receipts down here. Gallons is important. On this sheet, I can't emphasize enough, it doesn't matter how much you pay. I know your wallet does. It matters there for sure, but it doesn't matter on this report. Now, the next trip sheet, you have got to take this ending odometer right here, section B, transfer that over to the beginning odometer on the next trip. We don't want any gap miles here, and we'll go over that in a little bit. Now, this is a sample of a trip sheet from software, and that's totally fine if you want to do that. There are some really good software programs out there, and I'll share with you my favorite two that I've used personally. And you'll see it has all of the same information except the starting odometer and ending odometer, because we calculated this based off of a log sheet. So it's a little bit different, but we can still prove the miles, and that's what's important in the end. So this is the information that I actually pulled from IFTACH.org. That's the agency that governs this whole program. So if you'll look up here, the distance records that they will accept, this .100 is what we talked about with the spreadsheet or just a handwritten mileage trip sheet. And I'll link below a copy of each here. So you can do that, and this is what's required: the beginning and ending dates of the trip, the origin and destination, the route of travel, the beginning and ending reading of the odometer, hubometer, I never can say that, hubometer, engine control, or any other similar device. The total distance for the trip, the distance traveled in each jurisdiction. Jurisdiction is equated to state. Just know that, not city to city, but state line to state line. The vehicle ID number or vehicle unit number. Now, they did amend this, and this is current as of August of 2020. So you can always go back to IFTACH.org for the most current regulations. So they added, since ELD is a thing, it's something we're going to be living with, they did add this part 200 on what to look for if you have an ELD, what you need. So go through here, make sure that it matches pretty much what a regular trip sheet. Because if you're audited, they're going to make you prove where you went, where you started, where you ended, no gap miles involved there. So be sure you've got your miles accurate as possible. Then the next thing is fuel receipts. Now, back in the day, in the 90s when I was doing a lot of fuel tax, 90s, early 2000s, we had little individual fuel receipts because there wasn't really a fuel card involved at that point, and it was just a different time. Everything was pretty much handwritten, which honestly I prefer over all of the electronics. And I know that might make me sound old. That's okay. I don't mind, because I've done it both ways. Actually, I prefer the handwritten trip sheet over all of the fancy ELD stuff that sometimes works, sometimes doesn't work. But this is what the regs say, and so this is what I want to convey to you, because you can do it either way. So for tax paid credit, you need a valid receipt, invoice, or a transaction. So a fuel card statement also works as long as you have the date, where it was purchased, this, you're going to need the state, and how many gallons. Again, it's not about the amount that you paid. So you want to include gallons of fuel that powers your tractor, that makes a difference with that MPG. Now, reefer doesn't enter into that calculation. It has a whole different function. It's keeping that trailer cool, so it doesn't enter into the calculation of your MPG. So fuel receipts can look like this. individual receipts issued by the gas station. An itemized fuel card statement. That comes in real handy these days. Now, if you have multiple fuel cards, you will need multiple statements. You've got to add up all of this information. Or if you have bulk fuel receipts, you will need that as well. So again, let's go back to the sample that we did for a client, and this is what yours would look like. You have Arizona or wherever you traveled. You may not travel this. You may be up in the Northeast. It's still the same principle. So, this person traveled 4,861 miles. And then the taxable gallons is I, right here, divided by E. Okay? So we're taking the taxable miles, we're dividing it by the average MPG, and then that calculation goes here. Now, this L here, the purchased gallons, is what you actually purchase. That comes from the receipts. That goes in this column right here in this field. And we're going to take the calculation minus the actual purchased gallons, and then this is the net. And this is what matters. This is what we're paying taxes on or getting a little credit on. So we're going to take this times the state's tax rate. They change sometimes. Some states change all the time. Like Texas hasn't changed ever that I've known, which is crazy. So you're going to take 136 gallons times 0.26 for the tax rate, and this is the tax that's due. And then you just go to the next state, California, Louisiana, New Mexico, and Texas. And you'll notice in New Mexico, this person purchased a lot of fuel. So they get a credit right here. And so that credit goes against like California, where they purchase $600 or they have to pay $600. So it all kind of evens out. Now, California, we all know, is expensive. There's a lot of extra layers of tax going on there. And of course, the more you travel, the more you're going to have to pay. So it's, once you kind of figure out your route, then you'll know where to purchase that fuel, because you're really either going to, in most scenarios, you're going to purchase it at the pump, or you're going to pay on this report. There's really no other way around that. So in addition to the IFTA, there are 4 states that have a mileage tax permit. This is in addition to the fuel tax report. So you have your IFTA, and then if you travel through these states with a qualified vehicle, then you might have to have one of these permits as well. So here you're paying per mile traveled, and there's really no deduction. There's no, like if you look back here, we had, with New Mexico, there was a credit. In Texas, there was a credit. Really, with mileage tax, you don't have a tax credit. You just go look at your IFTA report, and here you're going to plug in this 2,440 miles into the report, take that times whatever the tax rate is currently, and that's what you pay. Just know that's in addition. Now, all of these are quarterly except Oregon. Oregon, you usually start out monthly. So I've missed that in the past, so I've learned by experience. So just remember, you are paying a fee per mile traveled. So gather your IFTA first, then use those calculations and transfer them onto these reports. Most of these reports now are filed online. A lot of the states now don't want you to mail in a return. So just go back to your state report and license and just see what the current laws are for that. Now here are the due dates. This is a quarterly filing. IFTA is quarterly. And then, of course, all the mileage tax permits are too, except for Oregon. That's why I kind of put that little footnote down there. So first quarter is January, February, March. That's due the following. So you're going from January the 1st through March 31st. 3 solid months of data. Miles traveled, fuel purchased, get your MPG, figure it out, on the report. And that is due a month later. So since the quarter ended March 31st, it's not due till April 30th. And if it falls on a weekend, it's that following Monday. And so that goes with the same for second quarter, April, May, June, due July 31st. Third quarter, July, August, September, due, you can kind of see the pattern here. Now, if it's late, you've got a $50 late fee plus interest. So there is no grace period here. Not even through COVID, there wasn't a grace period. It was due when it was due. So just know that there's really no excuses for all of this. Once you have your account set up, it is important to keep it up. Now, consider these things. This is from my experience in the last 31 years, learning the fuel tax system, both manual and now that everything is online. Most everything is online. You don't want any gap miles. I've had a lot of carriers come in and say, well, that was a personal trip. You need to add that because that's going to make a difference in your MPG. If you start pulling out miles, it's going to make your MPG go really low, which affects your taxes, and it affects it in a negative way. So you want to do all loaded and empty. I've had carriers say, well, that wasn't, I deadheaded, so that wasn't a revenue generated load. Well, it doesn't matter. You need to report all miles. So if you're doing it old school way from, odometers or ELD, make sure it encompasses everything. And then report all of your fuel purchases. We want an accurate, you want an accurate account of your MPG. If your MPG is too high, you have issues and you're going to be flagged by the IFTA department. If it's too low, same thing, you're going to have negative impact on your tax bottom line. So consider these items, and I've got a couple more for you. So consider this as well. Know the tax rate of each state that you travel. There's a lot of different tax rates. Northeast of the U.S. tends to be really expensive. Pennsylvania, super expensive. California, super expensive. So my recommendation is only buy the minimum amount of fuel you need at that point in the state. Get out of the state, purchase in a cheaper state. It's just, a lot of times they add on additional, like California has so many additional layers of taxes that just drives up the price of the fuel. And you only get the fuel tax credit on your IFTA. You don't get to deduct anything else. So if California is 80 cents a gallon, that's all you get, even though you might pay $3.50 a gallon in Nevada, and then you're paying $5. So there's $1.50 difference. So California, we know, has a lot of additional charges, so keep that to a minimal. Just kind of know you'll pay at the pump or you'll pay later at the report too. But those super expensive states, you don't want to pay all their additional fees and jump through all their hoops. So here's some resources you can use to calculate your return. You can set up a simple spreadsheet. Easy to do if you're techie savvy, to calculate the info. There are online systems, they are subscription based. There's two that I'm going to share with you next that are really good, that I really like. And then there's third-party service agents. We used to do fuel tax reporting. We don't anymore, but I can recommend several. So you can email me. I'll be happy to send you a list of third-party service agents. Now, here are my recommendations. For online, we've used tripsheetsonline.com in the past. And this one is very simple and it's very reasonable. It's just one of my favorites. You can calculate things either by odometer. You can have the program calculate by GPS, not GPS, but origin and destination. It's just a real easy program that most people can use. Super simple. Now, ProMiles, it's a little more in depth. I do love ProMiles. I love the company. I love the people that work for this company. And it's a very good product. If you are a service agent, they have an agent program that you can use. And then if you just have a single truck, they have a program you can use. They do have an online one now. And then they also have packages for your computer. So check with them. They're great people to work with, great customer service. And these two are my top favorite. They are those that I have actually used personally. I know there's probably a lot of other products out there. I just can't personally recommend them because I've not used them personally. So just remember, these systems are just tools. It's not, we're not sophisticated enough now, even now you would think we would be, but all systems are different, and so it would just be a major undertaking for these software companies. But these systems are just tools. You still have to take the information from the system and file it with the state. It's not an automatic integrated filing. But these are my favorites. So I want to thank you very much. I hope this gives you a little introduction to the IFTA, so where you can dive in and have confidence that you could do it yourself or try the tools that I've suggested. So if you have any questions, let me know. I'll be glad to help you out or steer you in the right direction. Like and subscribe to our channel, as we will be doing more of these videos to help you out. So have a great day, everyone. Talk to you soon. Bye.